This is a sign of weakness that we're starting to see. And it reminds me of 2006. That was a couple of years before the financial crisis. Home prices were starting to weaken a bit. Or 2005 maybe. So these things don't happen fast. You got lots of time to think about it. The housing market, though, does have a momentum component. And we're seeing a clipping of momentum at this time.
Well, if you do think that this reminds you of 2005 or 2006, could we see a bigger downturn in the housing market ahead?
Maybe. It's hard to identify turning points even in the housing market. It's easier than it is in the stock market. But it has been going up just linearly for 6 years now, and that's something that can't continue. There has to be a time when there's a break in our thinking about housing. We're kind of complacent about housing, thinking that it always goes up again. At least it always since the financial crisis. But they're getting higher, and in some places they're setting records. So it might be a time for a turnaround. We have to wait and see. I can't be confident.
Dr. Shiller, Rick Newman here on the set. When you're making comparisons in the housing market to 2005 and 2006, that might be kind of alarming for people who remember what happened later or what happened next, which is housing prices fell by something like 30 or 35%.
Yeah.
Are you predicting that could happen again, or suggesting it could?
Well, it could happen, but it won't. It's not likely it would be so severe. But you have to remember that the drop in home prices in the financial crisis was the most severe drop in the U.S. market since my data began in 1890. So it's just never been that severe. Now, it could be that we're primed to repeat it because it's in our memory and we're thinking about it. But still, I wouldn't expect something as severe as the great financial crisis coming on right now. There could be a significant correction or bear market. But I'm waiting and seeing now.
Professor Shiller, what would you say is the biggest headwind or the biggest risk that is facing the broader markets right now?
If the markets go down, well, it could bring on another recession. The housing market has been an important element of economic activity. And if people start to get pessimistic about housing and pull back and don't want to buy, then there will be a drop in our construction jobs. And that could be a seed for another recession. But by the way, we're overdue for another recession. These things come with regularity. They're not the end of the world. I'm not talking about a Great Depression. I'm talking about a possible recession.
But Dr. Shiller, are we living through a shift in which most people no longer want to purchase a home or an apartment? They want to rent. And isn't that going to just slow down the growth anyway?
Well, if there's a major shift toward renting, then the homes will have to be bought by
somebody,
landlords who will rent them out. But it's not a perfect arrangement. Homes are really designed for owner-occupants. It's very difficult for a landlord to manage all these separate, dispersed homes. So I think there is some loss of efficiency that would be harmful to the economy if that happened. It is true that there is more. There's also more interest in urban living, walkable cities, and this will also affect demand in the future.
All right.